Hello, everyone, and welcome to another Altos Trading Live strategy session. This is Richard Van Rich here with Jeff Tompkins, Craig Ward in the chat. Really excited to have you guys with us here tonight. We got a really awesome strategy to share with you that pairs really well with the current market environment. If this is your first time on one of our sessions, you'll realize that your microphone is muted. That's so that we can all hear Jeff talk. But there is a Q&A box, so if you have any questions at all, post those in the Q&A and we'll get to those throughout the evening. If you have to hop off for some reason or you get bumped, don't worry, this is recorded and will be available in the members area later this evening and YouTube probably tomorrow. So before I get started, I want to make sure you guys can hear me. You can see my screen. Can you guys hear me? It's like Phil's in there, Craig's in there. Just put a 1 in the chat box so that you can hear us. Bill, Mike, Bill. Okay, good. All right, let me move this out of the way so I can read the disclaimer. Trading securities and options involves risk. Prior to buying and selling an option, investor must receive a copy of characteristics and risks of standardized options. Investors need a broker to trade securities, and options must meet suitability requirements. Past results are not necessarily indicative of future performance. Performance figures are based on actual trades, including real money results. Due to the time-critical nature of trading, broker fees, and activity of other subscribers, there's no guarantee that subscribers will mirror our performance, and performance numbers shown are based on trades users could enter based on the trade signals. Before I give it to Jeff, just if you guys have any questions about your account, access or anything like that, email support@altostrading.com and we'll get anything that's specific to you tomorrow. That being said, let me give the mic to Jeff. So Jeff, if you want to grab it.
All right. Hey guys, welcome everybody. Can you hear me loud and clear?
Yeah, I see you there too. You got that nice glowing tropical tan going on.
Yeah, sadly, so my family, we did a little Hawaii trip, which is why we had a little bit of a travel snafu last week and we weren't able to hold our live session, so I apologize, but I didn't come back with a tan. I slather on the SPF 200, so.
Yeah, it's like with me, like I go outside and I just turn it like bright red lobster.
Yeah, I burn easy, so.
I'm like John Candy in Summer Rental.
Yeah, I'm on the same boat, but I had a great time. Nice to get out of this cold Boise weather. So
yeah,
yeah. So welcome everybody. Hey, Omar, Ed, Keith, good to see all you guys on. Yeah, we got a great show tonight, and a lot of fun stuff to cover. It's a wild market, and we're going to be talking about how to navigate that. So we'll cover our market overview. We'll look at our key levels. We'll map those out, and we're going to be focusing on my Slingshot setup that can help us navigate these types of market sell-offs, as well as be prepared for the inevitable market rebound. So I think you guys will get a lot out of that tonight on our session. It's very timely, and I think it will help with the current market conditions. We'll do a little bit of sector analysis. Look for some different underperforming and overperforming sectors to help you guys kind of navigate where it makes sense to focus our efforts on finding trade opportunities. We'll wrap up with Q&A, and we'll try to make this interactive like we always do. So we'll be prepared if you guys want to look at any particular symbols, stocks, whatnot. Have those ready. We'll definitely spend some time doing that tonight, and we can apply the Slingshot to that, as well as looking at the trade trend and divergence cloud indicators to help us sort of navigate the sell-off, as well as be prepared for market rebound. Yeah, I mean, these really create great opportunities. A lot of people fear downturns in the market. I love them because it's an opportunity to jump back in if you're looking to go long equities, and it gives us a nice opportunity. That's harder to do when the market's overbought, when we're hitting new all-time highs, because the risk is so high that something like what we're going through right now is around the corner. So I really love these types of market conditions. And I also, I'll show you tonight on the session. I play these to the downside as well. Like I shorted the NASDAQ E-mini, the S&P E-mini, and the Dow E-mini. I put those on yesterday, or yeah, I guess it was actually Friday. I put those on. Of course, market was closed yesterday. Futures opened up, 6 p.m. Eastern, and did really well overnight and today on the sell-off. So I'll show you guys how I did that as well.
Yeah, the slingshot is like one of my favorite strategies we teach, and I think it's been probably more than a year since we taught it. So a lot of these new folks in here, if you've never seen this before, you really, really want to like get some paper ready, some pen, and take some notes, because this is like a phenomenal, probably one of the top 3 strategies we teach ever. It's awesome. So you guys are really in for a good, awesome night tonight.
Yeah, and I use this, especially during market sell-offs, but it can help us really figure out where the market might be headed in the near term, as well as kind of answers all the questions for us. Where's the market gonna turn around? Where's it gonna start selling off? Where's it gonna turn around? And then where is it gonna return to at a minimum? So that's why I like it so much. It answers all those questions, checks all the boxes. So we'll take a look at that as soon as we run through our market analysis. So hopefully you can see my platform here. And I'm going to go ahead and turn my camera off so that it's not in the way.
Yeah, me too.
Okay, good. So let me actually go ahead and do a refresh here so we can get current day's data. All right, so expand this. So looking at we're going to start looking at the S&P. I got the SPY pulled up. Actually, let's go ahead and pull up the actual S&P index. Let's see what we got here. All right, so obviously a significant sell-off today in the S&P, as well across really all major indices. Stocks really got hammered across the board, and now the question is, where are we going? Where might this turn around, and where might we return to? Those are some of the questions we're going to be answering tonight on our session. So to start out, we'll map out our levels so that we kind of have an idea of where support and resistance resides. So if we look at obviously we kind of hit this major resistance zone around 4,800 on the S&P towards the end of 2021. And we've seen this sell-off ensue in the new year. So that's a major resistance area. And it will be quite interesting to see if we come back up and retest or even surpass that 4,800 level. If we don't within Q1 of this year through the end of March, I think that's going to be very bearish for the overall markets. We've got a significant resistance area around the 4750 as well. So if we look at the touch points on these areas, oops, let's make that transparent. So when we look at these, what the market's done around these levels, this actually is a bit of a head and shoulders pattern. So if we look at the previous all-time high and the resistance zones to the left and right of that, we've got kind of a classic head and shoulders formation going here. So you see here we have the head and then our shoulders, and right now we're kind of right at the neckline down here around the 45.50 level. So we got a little bit more to go. I'm kind of keeping a close eye on the futures tonight. They're kind of flat at the moment, but trading volume's thin at this time until the Asian session opens and then transitions over into the European. So if we look at the areas of support, those are really our strong levels of resistance, overhead resistance. And if we look at areas of support, this 45.50 level is really going to be a big one. That's a half century mark at the 550. And we've got we've got our touch point here from back in late August, early September. And so, we weren't able to break that at that time, that 45.50 level, and we sold off, and then came back up and finally broke it mid-November, or sorry, mid-October. And then we've kind of been in a range since then. So the fact that we haven't really been in a well-defined uptrend since Q4 of last year is lending more weight to the fact we may be out of this strong bull market and out of this uptrend. And I think what we're seeing right now fundamentally is the effects of the COVID pandemic finally hitting the market. We're seeing companies' quarterly earnings being impacted. We're just seeing a lot of what we thought we might have seen, much earlier, like early last year, even late 2020, that we're now kind of finally starting to see that hit the market. And that mainly in the form of, how it's impacting companies. We flew back on United from Maui last week, and it was like I think they said they've lost like a third of their workforce. At one point, before they were having employees, get vaccinated, they were losing on average one employee a week was dying from COVID. So they lost a significant number of employees due to the pandemic. And, that's airline industry is obviously a big one, and it's not just them though. I mean, this is now starting to really impact, and I saw it firsthand just being out, in public and seeing how it's hit the service industry, the travel industry. There was a lot of it had been like 20 years since I've been to Hawaii, but man, it was a different scene there. It was there was a lot of you could tell that how hardly they've been hit, especially the service industry, a lot of layoffs and unemployment and things. So
you had like a lot of people drop the ball. Like, you told me the story of like all the things that went wrong. It was like planes, trains, and automobiles. Like,
it really was a scene right out of that.
After the other. Yeah.
It was right out of that. I mean, it was just, service, it's just gone downhill. You guys have probably noticed it. And it's unfortunate, but we want to make the best of it and use it to our advantage here in the markets. And that's the idea. But shoot, I was gonna say something. I lost my train of thought. It'll come back to me. So as we look at the S&P, we want to look for areas of support, and we're going to plot a volatility indicator on here that can help us navigate these types of sell-offs, or even any strong move in the market that's outside of a 2 standard deviation move from the average. And so that's going to, I think, really be helpful for everybody. So let me look at the NASDAQ here and the VIX here real quick, and then we'll do that. So I'll clear these out. Let's look at the Qs. Okay, and the tech sector tends to get hit the hardest in these types of, it came back to me. I knew it would. The other thing too, that we're in a kind of a different situation than in past market sell-offs, is the inflation scenario. So we haven't seen inflation like we're seeing right now since the early 80s. And to some degree that, the Fed, how the Fed's going to handle that has been priced into the market. But until, that kind of expectation has passed, and we know, that what the Fed is planning on doing with rates, once we see that CPI number, and we know that we are in an extremely high level of inflation, not seen since the early 80s, that's the type of catalyst that can derail this bull market and actually put us into a more sustained bear market versus, these temporary sell-offs that we tend to see followed by rebounds. I mean, the market's not going to go straight down. It's still going to rebound. So that's where, timing becomes a critical component. We want to be able to navigate that and find the right time to jump in if we're going to look for long opportunities, or if we want to look for short opportunities. When does it make sense to do that? And that's what the problem we're going to solve tonight on our session. So similar picture with the NASDAQ. We've got our previous all-time high. It's also a head and shoulders pattern. So 400 on the Qs is a major level. And if we look at the pattern, we've got our left shoulder, our head, our right shoulder. But you can see here how many touch points we have at this 400 level. And that's why I say it's such a strong level. So we had so much rejection followed by significant moves down off that level that that's a very, very strong level, also being a century mark there at the 400. So another thing to point out here on the NASDAQ is the support, that what was a support level. And this is where it kind of differs from the, I didn't draw that real well. Let me redraw that. Differs from the S&P, where we still have some lower support. We don't have that as much on the NASDAQ. So you can see that this was a really strong level of support, which back in late August, early September was resistance, broke through, kind of mirrored the S&P there, broke through mid-October, went into the range. But now, over the past few days, we've broken back down below this level. So now this is a resistance area. And we've even got another one. If we look at this level here, where we've got what was support, but now we've closed below that level and it will serve as resistance. And so quite bearish. Now, if we look at the support, so these are all resistance levels now. If we look at support, and I'll change the color to make that a little bit easier for you. We do have one. Once again, my drawing skills aren't up to par here. So we do have one a little bit lower than current price. So we'll want to potentially look for a rebound. But you see this, if we zoom in here, let's get this out of here. Now all the levels are gonna not be accurate, so I'll clear those out. The low from January 10th, that's what we're gonna wanna watch for most likely for tomorrow, because we're so close to that level. But that is a support level, because if we go back and look again back in July, August, you'll see over here on the left side of the chart, we've got what was resistance that was broken in mid-August and is now serving as a level of support. We did break it again and then came through in mid-October. So we're going to want to watch the low from the 10th and how price reacts there. If it breaks and closes below, that's now going to become a resistance area. And I expect we'll eventually see price move down into the 350 level on the Qs. So watch for that. If this level holds, then we could see some retracement back up from this sell-off. So those are your major levels to watch on the S&P and NASDAQ 100. Let's look at the VIX real quick and get an idea of what's going on there. Because when we tie the VIX to the major indices, it can give us a good timing indicator of what might happen in the near term over the course of the next 30 days. So you can see that we've broken the 20 level, and the 20 level is really our line in the sand for being in a volatile market. So once the VIX rises above 20, that's telling us that there's more fear in the market. There's more risk of market sell-off. And we closed up today on the VIX, closed at 2279, up over 18%. So big spike in the VIX today. It's still not at a real high level, but it's above 20. So we want to watch for a break in the VIX of this high right here. All right, so that candle. So if we break that, we could spike up into the 28 to 30 level. And then that would tell us that, remember, the VIX is inversely correlated to the S&P. So if the VIX is going up, the S&P tends to go down. But if we move back below 20 on the VIX, that could give us a good timing indication that the sell-off may be losing steam and has a better chance of turning around. So that's why we want to watch this so closely. As long as the VIX stays above 20 and continues to go up, we want to be aware that this sell-off might not be quite over yet. If it returns back below 20, that could be a good way to time a turnaround in the market, in combination with what I'm about to cover with our Slingshot setup. So I'll pause there and see if there are any questions on the markets or the VIX.
Like nothing's come through yet. I think everybody's pretty anxious to see the Slingshot setup and how you can actually profit off of this versus being scared.
Yeah, absolutely. So let's go back to the S&P. And actually, let me. So we're going to use volatility bands, and specifically we use the Bollinger Bands. They measure standard deviation moves from the mean and can help us navigate these sell-offs. And I'll show you how we do that. So if I plot the Bollinger Bands here, let me make sure I got the right settings. Okay, perfect. So just to give you a quick overview of what the Slingshot is. So the Bollinger Bands, again, measure standard deviation moves from the mean, which is the center band. So it consists of three bands: the upper, the middle, and the lower. Generally, when we see price trail a band like it did here or it did here, that's what I call a volatility expansion. So we're seeing more volatility and a stronger move away from the mean or the average. And so what the Slingshot consists of is price trailing the lower band on a sell-off and then rebounding. So it's kind of like the analogy is it's like a slingshot, pulling the bands back as price sells off. So this arrow here, for instance, from back in September, where we had this sell off and price trailed the lower band. That's where you'd be pulling the Slingshot back. It can only be pulled back so far, right, before buyers come into the market and push prices back up. And that's where the Slingshot gets released. And that happened right here. And so what we look for is this volatility expansion, in other words, for price to trail the lower band and then bounce back and return to the volatility breakout or the volatility expansion. So it kind of looks like an upside down triangle. And you'll see this happen over and over again on market sell-offs. And so you'll see, and often a key point here is price will exceed that level of where it began trailing the lower band. But that would be kind of like if we were going to trade this, our initial profit target. And often, what I'll do is I'll look at that level as an initial profit target, and perhaps scale out of a long position and keep, let's say, for example's sake, the second half of the position open for any move past. And the upper band can be a good second target, or you can use trailing stops to try to capture more of these moves. But you'll see this happen over and over. So here's another, this is kind of more of a mini slingshot. Price trailed the lower band and came right back up to the volatility breakout here around the 4,600 level. So we haven't seen one of these since late November, early December last year. But one is setting up right now on the S&P. So see how price is now at the lower band. If it continues to trail this lower band, and I suspect that it very well could, that would be our slingshot. And again, that's just the bands pulling back. So this is, if we're looking to short an opportunity where we know that now prices touch this lower volatility band, if it continues, we know that there's now a slingshot in place. And these can be opportunities to short. So we can look for, take advantage of moves down on a trail of that lower band. So then the question becomes, well, where would we enter the market on the long side on a rebound? Omar, the settings I just use the default settings, the 20 period average for the center band, and then 2 standard deviations. So the 2 settings you can adjust on the Bollinger Bands are those, the average and then the standard deviation setting. So I use a 20 for the center line and then a 2 standard deviation. So you've used 22 on that. And then if we see this slingshot play out, we want to look for the rebound, right back up into this 45.75 level. So quarter century mark. So we don't know for sure where this sell-off is going to stop, and that's where we use things like tools like the VIX, right? So if we see this price trail the lower band, and then we start to see it stall, and we see the VIX drop back below 20, that can be a good way to time that. That's one way to do it. We can also look for horizontal support, right? So that's the purpose of mapping out our support and resistance levels, right? So look for past support. We see a zone here around 4,500 to 4,550, right, where the market has previously found support or served as resistance. So that could be a potential turning point. And those are the 2 main things that I use with the slingshot, is horizontal support when looking for the turnaround. In other words, if I wanted to get back in the market to go long, and then the VIX. So the horizontal support and the VIX. And once that rebound has, and there are other things you can use. You can use candlestick patterns. You can look for bullish reversal patterns, but definitely in the context of a support level. We want to see that like we did here, big bearish candle followed by a big bullish candle off of a support level. So this was actually fairly easy slingshot to identify, but it wasn't a real big one. It was, you would have captured a little bit of the move, not a whole lot of it. Some of the bigger slingshots, and we'll go back and look at some other examples here in just a sec. And we'll look at the NASDAQ, because again, the NASDAQ tends to make bigger percentage moves. So we often can find some really nice slingshot opportunities on the NASDAQ as well. But that's what we want to look for. And then we want to look for price to return back up to the volatility breakout. And again, that's where price initially went from being somewhere in the within the bounds of the upper and lower band to touching it and trailing it. Okay, so that's what we're in the midst of right now on the S&P. And if we look at the NASDAQ, I think we're actually further into the slingshot. So this one actually started technically on January 6th. So a couple of weeks ago, but we're in a slingshot right now on the NASDAQ, right? So we want to look for support, and we map that out at the start of our session, right? This level here where I've got my cursor at the low of this candle could be support. So we want to look for a potential turnaround there. That could indicate a rebound back up into the volatility expansion level. And also, again, the VIX, right? So we want to look at the VIX and see what the VIX is doing. The horizontal level, I'll map out again here for you. Right, so we want to see what happens. Are we going to break this? If so, then the slingshot's still in play. We don't want to jump in long yet at that point. We want to wait for rejection off of a support level and a lower VIX. But this is potentially a really nice slingshot setup. So again, on the Qs, we're watching the 368 level for a return back up into about the 382 level as an initial profit target. Again, if that breaks, then we'll continue to map out lower levels of support to find potential rebounds. There's a really big one down here. I mean, this would create an incredible buying opportunity if we make it all the way down to 350 on the Qs, because you can see we've got very significant support there. And I say that because if you look at past touch points, what did the NASDAQ do off of that level? Well, it went up a lot, right? So that there was a lot of demand down at that price, down at the 350 level. So if this 368 doesn't hold and we break and go down to 350, that could create some really nice buying opportunities with, a target. So if we go all the way down here, and then a target back up, we've got a lot more profit potential back up into this 382 level. So that really potentially really great opportunities here. And this is definitely a classic slingshot type setup setting up on the NASDAQ. But I want to show you kind of just from a higher level perspective where these occur, and we haven't seen as many of them, based on past market conditions. But you'll find these all over. This is probably our last biggest one in the COVID crash, right? That was a huge one. And not only, of course, did price come back up to that level, we far surpassed it. That one doesn't really count for much. It's pretty minimal. Same with this one. This is more of a significant slingshot here, right back up into that level. Another one here. And we got this one from September, October.
You guys see that, like, when price returned back to that level where the band broke it, a lot of times it acts a little bit as resistance, but then Jeff will show you here, like, if you break through that, it usually goes much higher.
Yeah, and that's a whole nother slingshot trade, is a breakout of the initial slingshot. So like if you see price break out from the level, those can be good trading opportunities too, because we often get really big parabolic moves after that breakout, as we did on actually all of these slingshots. So every one of these I just mapped out. We got a big parabolic move on a break above where that volatility expansion started. So again, these can be found all over the place, just by looking at the charts, daily charts of the major indices. And this not only happens on the major indices, it occurs on individual stocks too. So if you're looking at trading stocks, this is a great setup to use on stocks as well. I mean, here is a picture perfect one, right? So that was a big one, and right back up in. And again, here we got another breakout of the initial volatility expansion, and there's the parabolic move right there. So this can often be like on a breakout, a good like options play if you want to, if you're an options trader, buying calls on this breakout. You tend to get a really fast, significant move But you'll find these everywhere. I can just, all day long map these things out. And they're great. They're great trading opportunities. So Slingshot Setup, one of my favorites. And that's how you identify it. And there's actually slingshots within slingshots, not to get too complex, but you'll see those too. You'll see rebounds within those as well. And again, finding those levels of support and matching it with the VIX is the key to identifying when makes sense or when it might be appropriate to jump back into the long side, right? So look for those horizontal levels of support and keep an eye on the VIX. What's the VIX telling us? Is it retreating back to the 20 level or even below, indicating that the sell-off could be over? Or is it continuing to rise or stay above 20? In which case, the sell-off might not be done with us just quite yet.
Hey Jeff, does a slingshot work on more than just a daily time frame?
Absolutely. So yeah, you can find these setups as well on any time frame, and the psychology is all the same, right? There's panic in the market, right? The market's selling off. It's diverging or moving away from the mean, and it's basically there's panic in the market. So the time frame is kind of irrelevant. So yeah, you can definitely find these all over the place, any time frame, and you'll see a similar picture. The accuracy, I would say, is always going to be the best on a daily time frame on the indices with this setup, but certainly it can be applied to other asset classes, other symbols, and in any time frame.
Awesome. Yeah, it works in not just stocks, but it also works with futures and forex and crypto and everything.
Yeah, absolutely. Yeah, because it's all psychological behavior by market participants, regardless of what the asset class is or the time frame or whatever.
Yeah. Cool.
Yeah, so hopefully that will help you guys kind of feel more comfortable with these types of market conditions when there is a sell-off, help you navigate that as well as trade it if you decide to do that, and find some nice opportunities. So any more questions on the slingshot or the VIX or the markets in general?
I don't see anything coming through here.
All right, well, let's go ahead and open it up then. And you guys want to take a look at any symbols, any particular markets, or and I did want to point out too, as I mentioned in the agenda, sector performance. So there is one particular sector right now that's doing well. That's energy. So that can be, for those of you who don't want to short, or basically want to play to the long side, or your strategy doesn't include shorting. Energy is doing well now. In terms of underperformers, tech's getting hit the hardest right now, followed by healthcare and consumer discretionary. So if we want to open it up and maybe take a look at some symbols, and
there's a question that came through from Ed. He was wondering if trade trend works well with like short ETFs like SH or PSQ or the longer VXX.
It does actually. Trade trend does very well with volatile securities. So inverse ETFs are often leveraged, and it can give us some really nice signals on those. The one thing I always tell people with inverse ETFs, or especially leveraged ETFs, is they're really not intended to be buy and hold securities. They're basically like a 3x leveraged ETF. Like, let me see if we have this one loaded in. Yeah, so like the SPXL, which is the S&P Bull 3x leveraged ETF. is designed to magnify the performance of the S&P by 3 times. So like if the S&P went up 1% one day, then the SPXL, the triple X leveraged ETF that matches it, is going to go up 3%. But they reset every day. So it's a topic more complex for another day, but they're vulnerable to beta slippage. And for that reason, they're not really intended to be buy and hold instruments. They're actually were originally mainly designed for intraday trading, to leverage the moves that you see in whatever the ETF is tracking. And this case with the SPXL, that would be the S&P 500. And there's inverses of this. So like the inverse of the SPXL is the SPXS. So when the S&P goes down, the SPXS will go up. And you see that here today, it went up 5.4%, even though the S&P went down. But due to the upward trending bias and long-term upward trending bias in the markets, you're generally going to see the SPXS trend down over time, and you'll see the SPXL trend up over time.
All right, let's see. I got a couple votes for Tesla.
Oh yeah, that's always a popular one. And I haven't looked at Tesla lately. I don't have any positions in Tesla, but I would imagine it's actually weathered the sell-off fairly well. Had a big spike up here on earnings. Big volatility expansion. So I'm always very cautious with these. I mean, we're so far from the mean, and obviously a big gap up here. That we want to be. I don't see any real trading opportunities at the moment on Tesla. It's kind of moving flat to with a slight downward bias. But let me see here. There was a trade trend buy before this big up move. So you'll see there was a buy warning notification on June 30th, a trigger the next trading day, July 1st. And then we get this really nice move. So there's been some good, out of there. Some nice buy signals along the way. This is a nice sell signal. This is also a slingshot. And I didn't even cover that, but trade trend can be used with the slingshot setup as well. Here's a good example of that. So see, we get a sell warning and we're getting a volatility expansion. Price is starting to trail the lower band. We get a confirmed entry, a trigger, and the sell off. And this, using the trailing stop, would have been a great way to enter here on the rebound. So if we look at this, and then what happens with price? Right back up there. So there's the slingshot right there on Tesla. But right now, not seeing a whole lot of opportunity, no trade trend signals. But lots of good buy signals on Tesla. So I might wait for a bit of a retracement of this big gap and look for buy signals. But huge volatility expansion here. And whether this gap fills, remains to be seen. It's a big one to fill from a close before the gap of 273.18 and then close after of 1199.78. Again, I don't actively trade Tesla, so I'm not an expert on the stock or anything, but kind of what I'm seeing on that one.
All right, let's see. Phil says that Microsoft looks like they're setting up a slingshot right now.
Let's take a look.
So check that one out.
Microsoft, you said, right?
Correct.
Yeah, absolutely. Yep, that is definitely a slingshot. let's take a look here. Yeah, you see price trailing the lower band. Let's check for support. So it looks like we actually broke support today. So we got the strong resistance area broken to the upside. Here's actually another slingshot. Again, there's the parabolic move when price breaks out of that initial volatility expansion level. There's the parabolic move. So again, great opportunities there. Yeah, so these are no longer, because you could look at this and say, oh, the slingshot started back here. It actually didn't. A slingshot ends when price comes back up, and it did that there. These are very minor slingshots, not really tradable, but it did there as well. So the slingshot actually started right here. And this is a significant one. Support did break today here. So I'm not sure if this one's gonna be over yet. We'd want to look for, again, these are more zones than they are exact levels. So if we got back above 304 on Microsoft, that could be our indication that that level is going to hold, and we'll potentially return back
Homer
up.
brought up a good point. If it's, it'll be right around 300.
Yeah,
the 100 level.
Exactly. Yep, we got a century mark there at 300, so I'd watch that level absolutely. And let's see, we've got our next major. If we break 300, is right around 290. So again, we got some support at 290. But wherever this thing turns around, it's got a very high probability of going back up to that 320 level. So again, could be a good buying opportunity at Microsoft when that occurs. Also a good selling opportunity if you had been using the slingshot back in early January. Actually, we do technically, as I'm looking at this closer, have a bit of a slingshot within this as well. Because with it beginning here, we had this bullish candle right here, and price actually did come back up there. So while I'm, may still consider this the start of it at the 320 level, really technically it's down here. So this one could have more room to run down before a rebound, but something to be aware of. You may want to, if I were to jump in long here, I may look at an initial profit target of 308, and then if it breaks that up into the 320 level. But still looking bearish now. Obviously closed down almost 2.5% today, closed below this this 304, 305 support area, which now will serve as resistance. So we want to kind of watch that one, see how price reacts around that level. It was a good one to look at.
Let's see. Motion wants to see if you can take a look at UL. I think it's Unilever.
Yeah, so also slingshot. This one, of course, gapped way down, so there was not an opportunity to short unless you did it at the open today. Let's see. So support, but yeah, definitely another slingshot with support down here around 44 to 45. All right, so we want to look for a rejection of that level. for a potential rebound. And this is kind of a unique situation, but even though price gap down on Unilever, the volatility expansion still is up here, right? It's where the best way to identify it, it's where the two outer bands, the upper and lower band, start diverging from each other. So you can see that right here, where the upper band started to move up and the lower band started to move down, and price either trailed that lower band or broke through it, as it did in this case. So that's a slingshot. And again, looking for support to hold and a rebound back up to this 5250 level.
Yeah, Craig dug into it and said these guys try to buy some consumer health company. It didn't work out. And then it dropped 10% today. So it's a news-based drop.
Yeah, actually dropped 14.44.
Yeah. Just reading there. Let's see. So yeah, that's a few times for Starbucks.
Okay. Another nice slingshot. Yeah, and we're going to be seeing a lot of slingshots right now because the equities market's getting hit pretty hard. But we are kind of reaching some support areas. But definitely a nice, these are like the really good slingshots because prices trailed the lower band significantly. Looks like 96 for support. What happened at that level back in early 2021? Starbucks buyers came in and pushed the shares significantly higher. So that's a support area to watch. So again, we can look for that support level to hold. We can look for buy signals from trade trend with the anticipation that we'll see this mean revert back up to around the 108, 109 level.
These are such like opportune times. Like as when you guys see this happen, a lot of people get really nervous and scared. But ever since Jeff taught me this, like I guess it's been 5 or 6 years ago, whenever the market drops or stock tanks like this, I get excited because I know pretty much where it's going to come right back to.
Yeah, creates some really amazing opportunities. But yeah, we're still, I mean, I'm watching the futures right now. The E-minis are down about 0.2%. So we are seeing some of the sell-off continue into the evening. I'll see what it does tomorrow. Tomorrow is going to be a key day, I think. And I'm going to be posting in our Zillion commentary here this evening with some analysis of that. So if you guys are Zillion members, you can check that tonight or before market open tomorrow, where we post our commentaries. And we highlight things like the slingshot setup and major support and resistance zones and things. Shobha wants to look at SLB. This also, Schlumberger has been on fire. So this is really quite a parabolic move. And again, we see that these parabolic moves occur after the slingshot volatility expansion level is broken. So that was right here around the 32 level. So this would be a great opportunity, or would have been a great opportunity to act on Schlumberger to the upside. See a number of slingshots here. This one actually took a bit longer. It didn't really return back up to that level until over here. Again, there's your parabolic move after that break. Here's one. Here's your parabolic move after the break of the top bar there. Once again, parabolic move. And so and I'll do this from time to time, and many of our members who trade the Slingshot won't necessarily trade the initial Slingshot, the main part of that formation. They'll wait for the breakout for the parabolic move. Those can be really, really nice opportunities. It certainly takes patience and monitoring, but for that, it can pay off very nicely.
Some folks might be wondering this, and Claudio asked the question. But can you actually short the Slingshot where it breaks, the Bollinger Band breaks to the upside? You ever try to get it to return back to where it broke?
Yeah, and good question. And yeah, the answer is yes, but I don't. And you'll see that as well. If we clear one thing I wanted before I answer that, wanted to just notate this resistance area that was broken yesterday and has now become support. So our support now is at 37. So yeah, you'll see it work in reverse, but the reason I don't like it as much for that purpose, here's one. Number one, it tends to take longer because, uptrends can putter along for a long time. It tends to take longer for it to come back down. But you do see it, like I'm just kind of mapping out some of the ones here that are what we would call a reverse Slingshot. So yeah, you'll see it, but here's why I don't particularly like trading these. There's going to be times when you get caught and you just can't. I mean, if you're going to use it to that effect, there's going to be times you get caught, more so than using it the way that I've really designed it to be used, which is for buying opportunities, or shorting off the lower band, because stocks generally have a long-term upward bias. So like, here's an example of a reverse Slingshot, but it never, up until today, it still could. It hasn't come back down. So you're gonna run into these where, it didn't play out because, again, stocks generally over time, unless it's a really bad stock, if I were going to use a reverse Slingshot, I would be on a terrible stock, not on Schlumberger. Or there's going to be times where they just don't ever even come back down to that price, especially if it's at a lower price and the stock's undervalued. And so this one was no good. And it could have still been traded, but with a really tight stop, you really want to, if it doesn't work out, you got to get out, because you don't want to be, sitting short these shares while the stock's taken off.
Awesome.
Well, those are some great suggestions. I'm glad you guys, pretty much everyone, I think, had a nice Slingshot setup on it. And great examples of that setup. So I hope you guys, really got something out of that and can use it to your advantage. I think it's when used appropriately and diligently and patiently, I think it can be a really nice addition to anyone's strategy toolbox. I think it's a great way to help us navigate these types of sell-offs and find opportunities in whatever asset you're trading. So thanks for sharing those. Those are great. So we'll go ahead and wrap it up. We're right up on an hour tonight. Great to have everybody on and great participation. If you have any questions that we don't answer on the session tonight, you can, as Richard mentioned, email us at support@altostrading.com. Thanks, Ed. Appreciate that. Any final questions, Richard, to address before we wrap it up?
No, I think we're good.
Good. All right. Well, thanks again so much, guys. I hope you got a lot out of the session tonight. We'll see you next Tuesday. Thanks, Mike. Thanks, Omar and Phil. You bet. We'll see you guys next Tuesday. I'm not traveling anywhere until the Traders Expo, which is, what is that, Richard? 3rd or 4th week of February?
Yeah, I think it's I want to say it's the 6th, 7th, and 28th, but I don't.
Yeah, 26, 27, 28. So I won't be traveling up until then. So we should be able to have our sessions without any interruptions. So we'll plan on seeing you guys next Tuesday. Thanks, Lily. And hope you guys have a great rest of your week, great weekend, and we'll see you next week. Take care, guys.